Hi, welcome to Forex Ace Club. So there is something I've been backtesting. It involves order blocks and the mean threshold. That's the midpoint of the order block. So I've decided to create this video so that I can be able to demonstrate to each and every one of you. So if you like my content, guys, subscribe to my YouTube channel and also click on the notification bell so that you can be able to be notified every time I release good content. So I want us to look at this. This was on Friday, 5th July 2024. So this was the NFP news release. Both took the buy stops and the sell stops. So I want to show you how I was able to catch a move here. After the NFP news release, I don't usually trade the actual news release. That's at 3:30 Kenyan time. I don't usually trade it. I usually trade after news. So the moment the news was released, you can see it formed a very long wick. This is the wick in between the triangle. Sorry, the rectangle. So this green line, that's the wick in between this rectangle. So I'll just remove the rectangle. The market wicked down, and after the market wicked down, the market opened, wicked down, came up, traded up, then came lower and closed here. So this is the body, this is the open and this is the close, this is the high and this is the low of the candle. So the open and the close are represented by the body, and this other high, that's the wick, and on the lower side, that's the wick of the candlestick. So I want us to look at what the market did. The market traded between the wick, in between the wick. So I take my fib. So this is NAS 100 index, Nasdaq index, and this is the 3 minutes time frame. You can go on Friday, 5th of July at 3:30, so that you can be able to see what I'm talking about. Time frame is the 3 hours, time 3:30. So I'm going to use my fib to measure the low, the midpoint of this wick. So as you can see, 0%, 50% is the midpoint. You can see the market traded just slightly below the midpoint, which is fine. So the midpoint was respected, and we decided to buy. That was the first indication that the market was to go up. That was my first indication to look for a buy. So after that, the market bought and dropped. Three candlestick, continuous candlestick, represent a bullish order block. So I'll just remove my fib. I'll just draw the line to show the midpoint of the wick, and I'll make it dotted. And I'll increase the pixel so that it can be visible. So I usually mark my midpoint as dotted line. So any time you see a dotted line, that's the midpoint of something, either a fair value gap or a wick. So you can see here I've written order block and mean threshold. That's the concept I'm using here. So these three lines, three candlesticks, the red candlesticks, they represent the bullish order block. The market bought aggressively after the bullish order block. So what was my concern? My concern was the midpoint of the order block. Will the market come to the midpoint of the order block? So when you're trading the mean threshold, which mean threshold is the midpoint of the order block, you want to see the midpoint really respected. You don't want to see the midpoint not respected, because if it's not respected, then the setup is very invalid. You don't want to see it being disrespected. So I drew by the mean threshold. So we start from below, because we want 0 to start from. So if you want the fib to measure like 0 here, you start from the bottom. So then you go up and you extend. Now that's the 50% of the order block. Good. So look at what the market did. The market traded and traded into the 50% and did not violate the 50%. So that was my first indication, and I took a buy. Stop loss should be slightly below the order block because the market should not trade below. You can do a risk of 1:2, 1:3. And that was the trade. Such a beautiful trade. And you can see the market even went up and bypassed. It went up. You can see how the market went up. So that was the first trade I took during the NFP. So what concepts did I apply here? I applied midpoint of the week, bullish order block, mean threshold. Let me name the mean threshold. That's the mean threshold. So fib retracement, I don't like having too many lines, but I've just drawn the line so that you can be able to see it. So mean threshold, entry point, take profit. So the market bought, and my take profit was hit here. So let me go to the next trade, which happened on Monday, which is yesterday. Same concepts. So I used the 15 minutes time frame to be able to catch that trade. Here we go. So you can see this is the 4 hours midpoint of the fair value gap. So the market bought, it sold. Look at these three. What does this show? For me, this is an order block. There is a fair value gap here. The market bought, took out this high. There is a fair value gap. So the first thing was the fair value gap. Okay, that's the first indication. The price should retrace back. We take an entry, stop loss here. Secondly, this is my order block. How do I determine my entry? Mean threshold again. Midpoint of the order block. The midpoint is 50%. The market did not close below it. It wicked a bit, just a bit. But for me, that was okay because it was tapping the low of the fair value gap. That's okay for me. So I was able to take an entry. Take profits. Stop loss this low, take profit slightly above this high. And that's how I was able to catch two beautiful trades. Guys, thank you very much. Kindly like, subscribe, turn on the notification button. Happy trading.